So, Graham, thank you for joining. And we were just catching up a bit about your background. If you think about it, most people in Web3 have a unique background that kind of comes from all different backgrounds. But you were just talking about the M&A stuff you're doing. You're dealing with Asian markets. If you want to continue where you were.
Yeah, when I was at 28th Street Ventures, it's the family office for Michael Gearin. He's done the Atlanta Hawks. And I was doing a lot of software investing for him, a lot of things on the private equity side of things. And so we saw fintech deals out in Asia. We were doing solar infrastructure deals down in South America. This massive, 100 plus megawatt site down in Chile. I was managing the crypto portfolio. I actually started all of their crypto investment practice from scratch. But then did probably the kookiest deal I did when I was there was we acquired Grinder, the gay dating app, back in 2020.
Yeah, heard of it. have not
Yeah, I
participated,
haven't
but
heard
I'm
about
familiar. But
it.
yeah, heard of it. It's a big one. But going back to the beginning of working at this fund, what were some of the things that stood out when you were building the crypto fund specifically? How did you start building the thesis? What were the things that you started to look out for? Is this so? What year was this when you started
20.
building out that? It was 2019.
Yeah,
Okay, so like obviously the game has changed significantly since then. So was it primarily just tokens that you were looking at?
yeah. Well, so when I came in, I mean, they were not a fan of crypto at all, and for most people, and they kind of fell in that bucket. The only thing people had ever heard of was Bitcoin, maybe Ethereum, and especially when you're working for family office, your kind of fiduciary responsibility. Even though I'm kind of messing around with a bunch of other things and think a whole bunch of other stuff's interesting, your fiduciary responsibility first and foremost is what do these people need to round out their portfolio? And so the first step is just let's get a big slot of Bitcoin and Ethereum on their balance sheet and get them in the big apex assets. So that was just challenge one, which again, 2019, crypto is not a popular asset class. No one's making recommendations of 1% of your portfolio, let alone some of the stuff we're seeing these days of 3 to 5 or more. And so this was just like let's start from the fundamentals. Let's talk about scarcity. Let's talk about digital gold. Let's talk about the thesis of this as a store of value. And now let's shift entirely and talk about Ethereum, which I always framed as like a decentralized computer. So it was like start with the basics, and then we got more and more crazy over time.
Yeah, no, exactly. So I think what stands out in the process of this is you're really starting from zero. Not many others are doing this, and then you know, coming from a background of working at Morgan Stanley, the most important thing you can do, no matter how big or small the book is that you're managing for a client, um, you've got to allocate appropriately, and you have to mitigate risk. So when you're talking about mitigating risk for one of the most at that time like unknown and misunderstood assets, you're like, no, this is the right allocation for your book. Like this is how you should probably be looking at balancing here. Bitcoin, yeah, for someone, I don't even know if they allow it yet at Morgan. I know they have the ETFs now, but you can't just directly own Bitcoin. Now, granted, I understand family offices are managed a
Yeah,
bit differently, but
yeah,
just to consider like what that must have looked like for you, I think you're underplaying the amount of like stress that may have caused you to really push for them to venture into something like crypto.
yeah. Especially when I mean most of the press and PR around crypto up to that point had been entirely around this scam and Mount Gox and actually maybe it hasn't gotten that much better over the years, but it's just a lot of really negative headlines. And so a lot of it was let's start with why there's a long-term thesis behind these things. But you're right, there's a whole lot of just basic infrastructure. How do you custody and hold this? And we set them up with a Coinbase institutional account. We were holding some assets on chain with cold hardware. One of the guys had started doing a little bit of reading into this crazy protocol that the Winklevoss brothers, I think, published at some point, maybe back in 2019 or 2020, where they've got like multiple briefcases spread all around the world with like fragments of like the seed phrases and stuff. And they're like, do we need to do this? And I was like,
It's a little excessive.
maybe
It's a
not this
little
crazy.
excessive. Yeah.
Maybe not
Yeah.
this crazy.
No, but that's really interesting. I never thought about it for family offices. how they would need cold storage, of course. Like, I recommend that everyone should, be utilizing it in some capacity, but like, it's not for them, for like anyone that is not familiar with Web3, trying to like encourage them to be like, no, you're going to put it on this thing, you're going to upload it here and then put it away. It's like,
Yeah.
no, that's what my bank is for.
Yeah.
Did you have to go get like, did they put it in a safe somewhere like at a bank, like, or did they just, how did you handle the cold storage?
Well, in the interest of minimizing
Yeah,
operational security stuff, I'll just say that we found
right.
good cold solutions. That's all.
Okay, cool. That's yeah, not to be like, no, tell me everything right now, and like,
Yeah, and this,
okay, so who was the family officer? Okay, like, no, 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 that's
right.
not what I meant, but like, there were practices that were implemented that
Yeah.
like you
But
weren't
at the
just
time,
keeping it
this
on a
was very
central
much so,
exchange.
like, kind of choose your own adventure. There were a handful of good custodial services already. So, like, Fireblocks and Anchorage, I think were probably the 2 big ones. Maybe BitGo is starting to grow pretty large at this point as well. But, most of these things have kind of crazy fees, and I kinda put forward a couple options like, "Look, you got option 1 with fees, and some of these aren't totally self-custodial, or you can truly hold the stuff yourself." And so we went with actual proper self-custodial routes.
Got it. So going back into like just your role at the family office, did you come, because after looking at your post, I didn't see much about your financial experience and background, but finding yourself in this position to essentially be a decision maker, do the proper due diligence, etc., without a finance background, how did you catch yourself up to speed to understand, that part of the job?
Yeah. I'd had very minimal, financial training as far as that goes. In college, I was interested in finance and I studied economics and computer science. And so I had been involved in like the student investment organization. So I had like the very bare bones basic understanding of like valuation models, cash flow models. And actually, prior to starting my first company, Nomad X, I was that summer, it was either go launch this company or go take an internship at Goldman Sachs and ended up doing the kind of entrepreneurial thing. So I had a little bit of a financial background, but when I joined them, the reason why Michael Gearin hired me was that I hadn't been, in his words, tainted by the kind of big finance kind of schema of things, and he is honestly one of the smartest investors operators I've ever met, and I've learned more from that man than anyone else in my whole career. And his mind was, look, you understand technology, you run a software company, and I can teach you how to invest. And in his mind, it's not about these crazy DCFs, it's not about these crazy spreadsheets. It's about some type of, fundamental analysis and understanding the very basic levers of what moves a company and what makes value accrue somewhere. And so I got what I call the Michael Gearin MBA. I got to study and learn under him and learn his kind of investment theories and setups and everything, and start applying that to other areas that I found interesting.
So, what were some of the things that you were looking at? Because it sounds like when you were running the crypto arm of things, it was still so early stage that we're talking about infrastructure being in place and native tokens, but it's not like you're seeing all of these apps and protocols that we have now. So prior to that, I think this is more applicable, but still relevant. Talking about what your thesis was, looking at the like software and like SaaS type company, like those tech companies. Um, were they in this like, was he looking at pre-seed, seed stage companies? Was it even earlier, or did he, have a little bit more of a later stage time horizon?
Yeah. For the most part, we were looking at things that were much later stage, mostly because of check sizes. Is if you want to deploy a couple $1,000,000, it's hard to do that into super early stage companies unless you're leading rounds. And we had a fairly small investment team, and we didn't have interest in leading rounds, being actively engaged in companies. So on the venture side of things, we had more of a fund to fund strategies approach where we invested in multiple emerging managers who we thought had unique theses, had really strong hustle, great deal flow. And that was the approach we took on the venture side of things. But for a lot of tech companies we'd make investments in, like the case with Grinder, I mean, the sticker price of the acquisition was $600 million. So these are much larger deals.
Got it. So, okay, that clarifies. So you treated the family office was in the size of essentially like a fund that was able to fund other funds. For those that don't know, I think we're going down a different route than like most founders are, you know, privy to. But like, yeah,
Yeah.
so you would be able to find your exposure to the super high growth early stage stuff. You would go find an emerging founder, someone that has a micro fund in this sense, and say, hey, here's a check, go get us exposure. Hopefully you get one or two that can return the portfolio. Best of luck.
Yeah, and I'll give you a couple examples that like the kind of archetype was invest people who had a good investing track record and were raising a first or second fund. It was really important. Michael had this kind of concept of hunger of like, I want whoever's here to be hungry. Like if this is, experienced VC who's made their bag and they're on lap number 5 and 6 and they're just kind of like chilling, they're here to collect fees. He's like, I want someone who's hungry and really wants this. So we were looking for people who were hungry and had a unique thesis and unique deal flow. But these were people who already had some type of, anchor investor, were raising the rest of their fund, and we became another LP in their fund.
Got it.
Yep.
Understood.
Yep.
So yeah, you want someone, as people would say here in Web3, someone that's like in the trenches, someone that understands and has like a pulse on what these founders are dealing with, that they're trending towards. That's the go-to. Understood. So kind of reining it back in for, founders that may be listening, that may be going through a raise. What are some of the things, if we can apply some of like the gear and MBA to like make it applicable towards some of these founders that are in the process of either building out their MVP, maybe looking to raise, may not know exactly how they should, build their cap table. What are some of the things that you all would one like look out for in a founder? And then also this may be an interesting like uh question tag onto that, but like what would you look for the founder to ask of you all?
Oh, very good questions. First on the founder side, um, I was mentioning hustle earlier. That was in the context of VCs, but obviously that applies to startups as well. And when Michael thinks about founders at any stage of a company, he really likes the type of people who are thoughtful about every dollar spent. If it's the type of person who's super flashy and they just raised their Series A, but some reason they're driving around in an Escalade and they're taking Uber Blacks everywhere, and they've just got their new penthouse that they've gotten on their some loan they've gotten on their shares or something. He goes like, these aren't people who are financially responsible, and he always gave examples of these crazy wealthy founders that he's had lots of interactions with, lots of encounters with, who like you go into their office and they've got like plastic folding chairs and like the table from Walmart that costs like $20. And these guys are just so austere. And he's like, these guys are worth hundreds of millions of dollars. And he takes this as an indicator of fiscal responsibility, essentially. One of the big things that he focused on, and this is actually, I'd say, counter to most VC advice, and this is just his methodology, right? Every investor has their approach. He was always very focused on risk mitigation. How do I, as an investor, protect my downside? How do I, are you thinking about what goes wrong? And this is a very, I'd say Buffett like mentality, or Munger like mentality. Is Charlie Munger has this phrase where he goes, invert, always invert. It's not just what's going right, how do I win, but it's asking the question, what can go wrong? How do I lose? How does this bet go sour? And so Michael thought all the time about downside risks and and risk mitigation, which is why we didn't do a whole lot, did directly into the venture market a lot of times. But something like Grinder, these same principles applied, right? When we did an analysis of Grinder, it was, is this company going away? Absolutely not. Is this a good fundamental business? The company generates more in revenue than they have in losses, right? And more in expenses. Can I grow this top line? Absolutely. So it's all about, how do I make sure this bet doesn't go wrong? Because in his eyes, he's like, look, I've done it. I've built companies. Done the hard things. And now my hard task as building my family office and being a pure investor is preserving and growing that wealth. So, the strategy also involved a lot of treasury bills and a lot of things that, people in, the 2020s were going, this is crazy. Why would you have this much cash? But they've continued to use it just extremely, extremely thoughtfully.
Yeah, some of the things that I that people don't understand when it comes to this stuff is it's not all that sexy. You know what I mean?
Yeah.
Like T-bills are not hot.
Right.
Like, and in order to keep a family office and grow a family office, you have to do the things that are not necessarily fun, right? Like in anything. But yeah, no. Now shifting more towards you and your background, um, I think it'd be nice to talk about how you started Nomad X, how that came about, and then what you took it to, and just take us through the journey of Nomad X. The abridged and however much detail you would like to provide, of course.
Yeah. I'll give you like the maybe 2-3 minute version. I started this with one of my fraternity brothers, Steve Allen, from our frat house. And I mean, we had 2 rooms next to each other in the frat house. And if you've ever seen that scene from Step Brothers where like in the middle of the night they like bunk one of the beds on top of the other so they have more space for activities, that's literally what we did with my room. My room turned into the office. Both our desks were in there. We became like this 24/7 team where like I think one of us was up almost all the time. Steve was a night owl, I'm a morning bird. And so we just had, kind of alternating schedules. But both
And
of
did
us,
you just become best friends?
yeah, we just got best friends. It was a really fun experience, and building a company with a friend is a very special experience. You build a lifelong bond that way. Um, but the premise of the company was we wanted to build an international network of host cities for this kind of new emerging class that we saw as being interesting and obvious at the time in 2017 called digital nomads. And we started seeing like this is an interesting group and we think there's going to be more remote workers going forward. Of course, we couldn't have predicted a global pandemic would accelerate this trend dramatically, but we said this is such an interesting group. So we said we want to build this network of host cities where people can have housing, have access to co-working spaces. And so the interface looked and felt like Airbnb, struck partnerships with co-working spaces that people could go work out of. And the idea was you could stay within our network, go to Lisbon and then Prague, Budapest, Chiang Mai, Thailand, stay for 1 to 3 months at a time, don't overstay your visas, kind of stay within our network, stay within this community, have other people who are working and living remotely with you as well. So that was the premise of the company. We launched it in Lisbon. I lived there on and off for about 2 years. That's where our headquarters was based out of, where we had most of our inventory. And it was, I mean, I was a dumb college kid. I had literally no idea what I was doing, and everything was learning on the fly. Everything was figured out as you go. And it was, feet to the fire, figure it out.
So some of the things that come to mind immediately is just like the regulation surrounding, the app. I'm sure going into it, you're like, oh no, I'm just going to build this platform. Everything's going to be fine. Like, and then you just hit with reality immediately of like, there are some rules you need to follow. Were you prepared for that at all?
Yes and no. Like, I will say the regulatory side was never a major inhibitor. It wasn't like the thing that was ever the thing that was like mainly stopping us, especially since we started in Lisbon and they were very like tourist friendly, especially 2017, 2018. I mean, we brought tens of thousands of people to Lisbon. We were probably a huge part of this whole digital nomad remote
No
work.
kidding.
Yeah, no, seriously.
Yeah.
People talk about it all the time now, and I'm like, yeah, I
I
know.
know plenty of people that are still moving or if not have already moved to Lisbon.
Right.
Yeah.
And I obviously, we were a part of that. But the reason why we chose there was because it was already becoming a hub and it was becoming quite big. Um, and so for us, it was validating for our thesis and watching it play out, over the years that this is a fantastic place to bring people to go work remotely.
Right, right. So, okay, if that wasn't the inhibitor of like the regulatory issues, what were some of the roadblocks that you had to endure and work around that were stand out for you?
Yeah, I think there was part of this process of that seemed very simple in my head of well someone wants to rent their place out to someone for instead of days at a time the way you might on Airbnb, rent it out for 1 to 3 months, and they just need to get it on the platform and then I get eyes on that place and get them to rent it, and pretty straightforward. But there's so much nuance in that whole process. Someone uploads the property. I need to go validate it. Is your Wi-Fi actually good? Is this going to support people? Is this a fraudulent listing? Okay, I've now listed your listing. You established a price. Someone's found you on my platform. How do I make sure that like we're still getting some type of cut of the fees, right? That people aren't escaping the platform, and how do you prevent leakage? I mean, these are really tough problems. And so when you start thinking about what's the what's the calculation that needs to go into, what's my expected, revenue from a particular unit? How long do I need to rent that unit for? What's my expected churn? You start backing into these calculations. Dude, it's a tough business, and these are very challenging margins to deal with until you're at very, very large scale. And that was a big challenge for us.
Right. And so, okay, like now you've got the company established, you're starting to see cash flow. Then what? Like it becomes this thing. You're a sophomore in college. You're not like, you know what I mean? Like when I'm a sophomore in college, I'm trying to figure out what I wanted to do. You had already established a company. You're now, you know, feet to the fire. How do you find your exit? Like, how do you find, like, what happens next?
Yeah. In the same way that starting the company was figure it out as you go, and I got to go raise money. Let's figure out how that works. Oh, there's this guy from WNL who I'd met my freshman year at some entrepreneurship event. He's had some tech exits. Let me go pitch him on this. Oh, he thinks it's great. He says, let's go out to San Francisco. Let's go pitch some people. So every step of the way, it's just what do I need to solve right now, and then use whatever resources you got to go figure it out. What I will say. So later in the stage of this company. So fast forward to 2018. We've got to try to pivot business models. We're going, hey, this is challenging. I'm not sure how this onboarding's going, and we developed a thesis that we trialed, and this thesis was okay. The individual onesies twosies of guy A, guy B, finding a place. We make some money on that. How do you land a really big fish? Can I go to a company and can I get a whole remote team to come remote? And we ended up exploring this model where we'd actually host offsites for companies. So like there's this company based in Atlanta. It's called Search Discovery. They had about 110 people or so. We flew them all out to Lisbon. We set them all up on properties. We had this big co-working space. We actually built a pop-up space for them, like built this thing overnight for them. And this was us just, trying and experimenting things. And we realized, this feels a little bit more like a service business. I'm not sure how well this scales. So we didn't do a whole lot more of that stuff, but this is part of this whole kind of testing iteration, thing that was going on. We ended up getting very lucky at some point where I was starting to worry. I said, I'm not sure if we're going to be able to raise more money because I'm not sure that we're hitting our growth metrics. We're growing fast enough and have big enough margins. Every investor wants to see this crazy hockey stick graph. And I'm not sure if we're going to be able to do this. And, we ended up getting what I describe as quite lucky in that we ended up having our real estate inventory acquired by an Airbnb competitor, a group called Flat.io. They were largely based in Eastern Central Europe. They were kind of moving eastwards, more towards Lisbon, where we had tons and tons of inventory over on the the west coast of Europe, and so it became a kind of a natural thing for them. And so that was like the kind of like the needle in the haystack, if you will, that frankly speaking we got kind of lucky with.
The breath of fresh air. It's like, oh my gosh, how did that? We just pulled it off. That's amazing. So that exit, when did that happen? What year?
So between 2019 and 2020,
Wow.
before COVID, but like, I mean, there was a long time for this actually to go through, and there's a lot of moving parts for it. But yeah, so
I would hope that that was a win-win. I mean, if they were able to scale and acquire your inventory out right when COVID basically kicked off,
yeah,
you know
well,
what I mean?
something that's very interesting is for companies that serve remote workers and digital nomads during COVID, there was a massive bifurcation. They sink or they swim, right? Which is you got this really tough period through the middle and later half of 2020, which if you're well established, you have a good model, if you've got cash to see you through the next couple of months, next couple of years, and you see it through to the other side, you now have a much more matured, accelerated market. But if you can't make it through, and if you're losing cash, you get acquired, you lose the company, you run out of business, you go bankrupt. So we actually saw a big bifurcation of competitors in like our sphere get acquired, go bankrupt, or some of them do quite well. So for example, Remote Year got acquired by Selena. Great guys over at Remote Year. Um, And so all these companies, there's kind of this like big shakeup. And I'd like to think that we would have been on the successful half of things, but who knows, right? Yeah, I mean, who knows what the alternative universe looks like?
Got it. No, understood. So after that, then that's when you started to work for the family office, correct?
Yeah.
And then after that, when did Constitution Dow come into play?
Constitution Dow is when I was working at 28th Street Ventures, which, I mean, what a funny conversation. Like, hey, Michael, this next week's going to be really weird. I started this side quest. How do I explain this to you?
And so like yeah, talk us through it. Like what the did they have to have been looking at you like you're trolling us, right? Like you're not actually trying to buy the Constitution of the United States. That's not like what was the pulse in the room like? Are they like who the hell did we just hire? Like who is this kid? Like what was it? Like
Yeah. You know, one of the things I'm there's a lot of reasons I'm extremely grateful for Michael Gearin. One of the reasons I have a lot of gratitude for him, though, is the man is extremely open-minded in a huge number of ways, and he extends a lot of trust to the people that he brings onto his team, and he listens with a very open mind. So in late 2019, when I started pitching um, crypto exposure, he was open minded to it. We had a good conversation, and it required compelling and convincing, but we got there. And so when I said we're launching a DAO to buy the Constitution, his first question was, "Do you think it'll work?" Well, I think it's going to work. I told him I think it might, and he gave me the time, the space to be able to do it, and I was able to focus on it. And he said if you think this is a worthwhile place to be able to spend your time, go for it.
so cool.
Yeah, I
So cool.
extremely lucky to get to work with a man like that, and that whole team, the whole family, is just out of this world. Wonderful people.
I mean the thing is to like hone in on and really emphasize is the fact that people are not like that in general, right? Any boss, any manager, anyone that you have, people are not open minded. But when they are, it's lightning in a bottle, and I think a lot can be accomplished, and that's something to like consider whether you're a founder, whether you're just an employee or a manager. Like
Yeah,
when you have the trust in the people that you've put around you, that's when real magic happens, in my opinion.
the other thing that I knew was true at the time when I worked for them, but I wouldn't truly appreciate it until going through a lot of experiences. And honestly speaking, meeting a lot of people in the crypto industry was also these are ethical, good people. Like when they made decisions, it was really truly ethics and morals first, followed by investment frameworks, followed by cash flow analyses, downside protection, all these other things, right? But it was first and foremost like from a framework of like ethics and morals. And Michael had this great framework of like, do I like working with people? Do I like these people? Do I want to do business with them? Do I trust them? And Michael, to a certain degree, because of his enormous success, earned the luxury of being able to kind of pick and choose the people he's done business with now later in his career. But I mean, just truly wonderful, ethical people, which never take for granted when you get to work with folks like that.
Yeah, and you mentioned again, and just about crypto. I think, one of the things that has become not a trend and it's not intended, but like one thing that we keep referring to talking about this space is like the stigma around it. And I think this is a great, I would love to pick your brain on this thought of like, does this industry, does this technology, somehow break through the stigma and the taboo around like crypto? And, there's so many bad actors, sure, but like, I think if we're me personally, I think we're looking people that have this mindset are looking at the tree among the forest, and they're not really realizing like how much of the. And obviously, I'm gonna have bias. Look at me, like the podcast is on a Web3 like platform, like so. Of course, I'm gonna say that. But do you think we're gonna see some change of this, like this narrative that makes crypto such a bad? It's like the Boo Radley. It's like this enigma. You know what I mean? Like, so what are your thoughts on that? Do we break through it, and how?
I think we do because there is good technology and because there are good actors And in the long run, good technology wins and it gets adopted. In the long run, bad actors lose and they get shaken out. But it is horrifically, deeply unfortunate that there are a lot of bad actors. There are a lot of people, I mean, misusing tools, technology for harmful, exploitative, sometimes malicious purposes. I'm actually a fan of tackling those topics head on and saying, yes, it is a problem. There is money laundering in our industry. There are, funding billions of dollars to the North Korean, government. It's an authoritarian, autocratic regime. I don't want money going there. I don't want to fund them, and I don't want our industry to accidentally be doing it. I don't think anyone's doing this stuff intentionally, but the reality is that it's happening, and I would just like to see more maturity of the industry to, be honest with ourselves about there are bad actors. Now, how do we actually use the tools that exist to root out those bad problems and to prevent them from happening without compromising the principles and ideals that this stuff is built on? And like, I'll give you one basic example here, and this is a microcosm because I think this can get applied to many other instances. If my concern, if I put on my cypherpunk hat and I say, I really care about privacy, I care about self-custodial things. I do care about those things. I think those are awesome principles that are brought by the crypto world. But now we have to put on our other hat. We have to say, okay, what does privacy and self-custody allow in the context of North Korea? It allows them to be able to exploit smart contracts and fund a bad regime. Okay, what if we used something like, ZK proofs to allow for privacy preserving proof that I'm not a bad actor. I'm not an OFAC sanction list, but also you don't even need to know who I am. So you're actually able to simultaneously preserve privacy while also effectuating the same types of goals and objectives that regulators have, right? If I go talk to people at FinCEN under the Treasury Department, and I go and I ask them, if you really dig down and try to ask them what they want, they don't want to kill crypto. They don't want to kill technologies. They don't want to kill innovation. They want to stop bad people from getting money. And so if you introduce to them, here's how you could do it with this really amazing privacy preserving tool that allows us to extend more freedoms to good people, they go, wow, this is amazing. I wish we'd known about that. And our industry needs more conversations between regulators and thoughtful innovators who are willing to find some type of middle ground.
Absolutely. And I think, the issue, just to reiterate and piggyback, because I completely agree, we have so many maxis of like privacy, right? And a lot of them fall into this camp of like, if I'm giving a morsel, like any sort of information away that is not necessary for this transaction to occur, then I'm not doing it. And tip of the hat, great, like proud of you for being able to accomplish that. I don't know how you live your life like that. That's insane. But then simultaneously, it's like you have people that are innovating, creating without privacy even in mind, right? And I think the biggest appeal for me of why I even got into crypto in the first place is because of self-sovereignty, because of privacy. Not that I'm like some maxi that's, I have a VPN. I
Sure.
use Proton Mail, but I'm not going like, it's not that much further. But I think ZK proves is this fine balance between like, it's just logical. It's just guidelines and like, I think what we're suffering right now is that there is just, we aren't finding the gray area and we don't know how to live in the gray area. It's very polarized where it's like, it's either this way or that. And we're not finding progress because we're not playing in the gray area. And I think ZK proofs are a great example of how we can progress where there's compromise, right? Like we have to be able to find compromise in these things if we're going to progress into like actually making this a universally accepted technology.
100%. I think it also requires an uncomfortable amount of intellectual honesty. And I think some people put the weight of the entire industry on their shoulders and they say, if I criticize the crypto industry for bad things I'm observing, that makes me a bad person. And I actually take the opposite approach. I'm like, no, by identifying the bad parts and calling them what they are, you're helping identify the challenges and begin trying to actually find solutions for them. So I think it requires a lot of intellectual honesty, which requires some mental compartmentalization about what is that I'm doing versus other people. and it requires trying to find really hard solutions. It requires putting yourself in the shoes of regulators too and trying to understand like what is it that they actually want. I think there's a lot of people who like take this super broad stroke and they go, man, regulators hate me. They want to crush the industry. They want to crush innovation. I'm like, I've talked to tons of regulators, and almost all of them on an individual human level are great people, great humans who mean well, have wonderful lives, care about the types of things I care about, want prosperity, want growth, want economic opportunity. They want innovation, but they care about bad things happening and they want to stop bad things from happening. And they're usually very curious when I propose something that they've never heard of before. And I realize there just aren't many people in the industry who are both aware of what their objectives are, aware of what technologies could be used to achieve those things, and willing to have the hard conversations necessary to start to make some type of progress there.
I think one of the most prominent examples that is a use case of using the technology in the way that we're describing that always comes to mind is, think if you had a daughter and she just turned 21 and she's going to a bar and there is a creepy bouncer that is checking IDs, right? And if they get that ID and they see my daughter's name, her address, all of the information that's pertinent for him, and I'm not saying like, very few times does this ever happen. I'm using the outlier experience, but even in those, outlier experiences, there are going to be cases of this occurring. Why prevent it? Why not prevent it if you can? With this technology that we're describing, all he needs to do is validate it with a wallet that says, yes, that individual's 21 years old. You need to know nothing more. You can let them get access to this event or this bar or whatever. Right. And I think you can apply that same logic to exchanges that are occurring on chain. Right. Like if we are getting the information that validates that they are not a bad actor, and we can go through those checks and balances as, an entire community to say what is or isn't. But if you have the capability of using it, you should. I think that that's logical. I think even if I'm using things like Zcash or Monero, right? If I'm trying to acquire, like, this is where it gets so silly. If I'm trying to purchase it using Zashi, like the ZK, or excuse me, the Zcash wallet, if I'm trying to buy it within the wallet, the KYC that has to go through to actually onboard, they're getting all of my information anyway, right? So it's like, I think the balance between, I think we're trying to split hairs where it's just unnecessary, right? Like those are the things that we're describing are things that can be easily implemented that I think we should all just universally accept and find compromise so we can just keep going. That's me selfishly, but
Yeah.
that's my rant.
Yeah. There's a framework that I keep in my head that applies to crypto, but I think it also applies to like security and safety more broadly. And this is like just this ongoing relationship between any type of government, any type of regulator, and the society in which you participate, which is on one end of the spectrum. Let's say there's no regulation, there's no oversight, there's no laws. You are open to a huge amount of third party harm and third party exploitation. There's no laws. The government's not going to harm me. They can't because they don't exist. They don't have power. They don't have weapons. They don't have anything. And that's one version of society. This is the lawless land. And so your third party harm is likely to be extremely high. On the other side of the spectrum, we have a super powerful authoritarian government that's omnipotent, all powerful. There's probably not any third party harm whatsoever. Like there's no space for a bad actor to do anything wrong, but I'm extremely open to being harmed and exploited by the government, the group with power. Somewhere in the middle there's a happy medium. There's a sweet spot that is enough regulatory oversight and enough rules that you're minimizing third-party harm and third-party exploitation, but you're also minimizing the potential harm and exploitation from the regulatory or government body itself. And that is the very challenging middle ground we have to seek.
Absolutely. I mean, the TLDR of this is just compromise, right? Like I think in order for us to progress, we have to find the happy medium as you're describing. And in order to do that, we need these like maxis to be able to see like, look, if you don't get this done, we're going to continue to get, rated by these third parties, and all of us are susceptible to that until we actually find some progress, right? So again, to your point, I really think it's a matter of finding happy mediums here, and recognizing that that is not a loss. Like that's actually, that compromise is actually progress. And I know I sound so like, because I do believe in privacy, and I probably lean even closer to that than like the authoritarian side that gives over regulation. I prefer, as a matter of fact, the least amount of regulation possible is where I would sit in this argument. Um, which I think a lot of people align with, but
especially in
ultimately,
the industry.
exactly. And what's so fascinating that I'm seeing today, and I really want to get into mezzanine, but the last thought that I wanted to discuss is just, I'm so fascinated by the industry, and maybe I'm just in the wrong channels, but like I do not see privacy being a priority as much anymore among the people that I see on Farcaster, on X. Like people just don't care. And I think that was expected as we onboard more individuals into the space, but it is really fascinating, and that's not a slight. Everyone's entitled to whatever they want to believe and feel and think, but like for me personally, it's kind of startling. It's like I'm kind of taken aback by it. But yeah, so anyway, I don't know if you have thoughts on that, but
I think it's just a natural function of the early adopters were the people who had the most strong ideological beliefs. And the more you shift towards mainstream adoption, the more the rationale for using a product shift towards utility and function as opposed to ideology. So you're just seeing that natural shift. That's
right.
all.
Right. No, fair enough. Fair enough. I just wish that there was this priority of founders, of builders, to at least consider some of the things you can do to protect end users. Not saying they're not.
Yeah.
Not saying they're not at all. I'm just
Yeah.
saying like that is a focus that I think should be, as you're shepherding in these users that have been exposed by, and it's not even from like a privacy of like protecting individuals from like being hacked or you know wiped, like their wallet swiped. It's even more so of like protecting their data so that they can't be pimped out by these institutions. You know what I mean? For lack of better terms. But anyway, I do want to shift over and hear what about like what you're building right now with mezzanine, um and just learn a little bit more about the vision here.
Yeah. Totally. So mezzanine is a modern operating system for companies. And it is allows an organization to run on chain, to self custody assets, to send money globally, and it is designed to allow a regular business or regular company to start shifting from being in the traditional financial world into the on-chain financial world.
So what are some of the deeper dive examples that we can talk about, that you're seeing today with mezzanine?
Yeah. So at the core of mezzanine is a company treasury. It's a multi-signature wallet, which means that you, multiple other actors, can approve to have that money moved. And at the core of this, so you've got the multi-sig, and then you have our access control system. Access control being I've got lots of stakeholders in my organization. I've got the founders, I've got the employees, maybe I've got accountants and lawyers that I work with, maybe I've got third parties. But any good piece of software used by a business, a company, any scaled organization requires the ability to say, look, there's different people that fill different functions in my organization. Jeff might be, an investor in my organization. I want him to be able to see certain things related to my financials, my financial history, some of my documents. But he's not approving payroll. He doesn't need to see the nuances of all of my organization's history. So you've got this treasury, and you've got this permissioning and access control system that kind of sits at the top of all this. And we allow for third party developers to build any type of application that touches the financial infrastructure of a company. This could be something like payroll, invoicing, fundraising. Oh, I got to issue refunds to someone in my company. Maybe I need to vest tokens or vest shares to a person in my organization. Maybe I need to interact with a currency exchange. Maybe I need to move money to and from my bank. Maybe I need to issue credit cards. Anything that touches your organization's financial stack can be applied can use this kind of overarching enterprise grade infrastructure.
So what's some of that integration look like for a company? Let's say someone that is um, just like a SaaS company that's in the traditional, space. They have no blockchain affiliation. They are not native whatsoever. I would assume that's probably your target audience, right? For a customer.
Right. So right now, our target audience are people who are doing something on chain in some way. Oftentimes, usually, it's the case that they're using stable coins. They either received money. Let's say their investor gave them USDC on chain. They signed a safe note. Someone sent them USDC instead of wiring it. Or you got a revenue stream. Maybe it's protocol revenue. It's coming in via a smart contract. Maybe you're issuing invoices to people, and the only way they can pay is with stable coins. So our users are kind of on chain and off chain, but they have to interact on chain in some way, which means that this is a good system for them to use.
Understood.
Yeah.
So I think QuickNode, the company that I work with currently, that would be a great use case. So they receive invoices from Coinbase, or excuse me, they will send invoices on behalf of Coinbase
Right.
payments, and then so we accept stables. But in order to get an inside look of how all of that is, operating, we would lean on Mezzanine to make sure that everything is in order. So if I'm like a stakeholder, if I have RSUs, I'd be able to take a look at that all on Mezzanine's platform.
Yeah. Now, the caveat here is right now, the tools that are available, you can pay people, you can move money, you can, there's a compensation module, there's an invoicing module. So you can do a lot of the very basic, functions. There's now an accounting suite. You can connect your bank accounts. It's your on chain and your off chain. The bank integrations to move stablecoin to fiat. It's coming online. So the part about can I do the shares and share vesting? We're working with third parties that literally do exactly those things. But people need to take the SDK, continue to build on it, and basically join this competitive marketplace. Even if there's already, say, a compensation application on Mezzanine, you can go build a competitor. You can deploy on Mezzanine, and this becomes a place that if I'm a company and I say I need to pay people, I should actually have multiple options. I should be able to choose, do I want product A or product B? And my switching cost between those two should be low, if next to nothing. It should be thoughtless that it goes, I don't like this product anymore. Let me switch and use this other one. But it still works with the rest of my system. It's integrated into my accounting. It has all of my documents are still synced in the same place. It's integrated into my access control and permissioning. It's integrated into my bank account and my money. So you don't have to go recreate all these integrations every time, again from scratch.
So how long have you been at this? When did you truly launch Mezzanine?
About 12 months ago was when
Wow.
we started building this product. And I actually don't know. Can I share my screen, or is this good?
Yeah, of course. No,
Is
no,
this
no.
audio
By
only?
all means.
Is
No,
this
no, no. You're good.
I,
You
I
can
don't
share.
know how people actually see this, but there's
It'll be nice. It'll look good. Your face, your pretty mug will go away, I believe, and then this will pop up. Yeah.
okay. So this is an example, right? You as a company, this is a demo organization. They've got some on-chain assets, some Ether, some stable coins, and they've also connected their credit card, which they owe, $400 on. They've got their savings account and their checkings account. And so it shows you what's your total assets. And I should be able to take these stable coins and I should be able to convert that to fiat and send it to my bank. And the money that's in my bank, I should be able to, convert that to stable coin and put it back into my treasury. And so these things should feel like moving money between checkings and savings. But the real bread and butter here is this app store. What is the functions that I need to do, right? I need to send money. I need to pay people who are on my team. I need to issue invoices and request money. Oh, I want a really pretty dashboard that shows me, the inflows and outflows of my organization. Maybe I want, business cards that let me spend on behalf of my stablecoin balance. Maybe I need a line of credit or debt to fund my organization. So you can imagine over time, there's just more and more tools, options, and possibilities of what you can do. And every organization's nav bar is going to look entirely different because the tools that they need are different from one company to another. So what we're doing is we're leaning into this major benefit of crypto, which is composability, right? Of being able to stack a bunch of Legos together. And we're using it the way it's actually intended to. But you have to have, if you want to be proper business or proper company, there's a lot of things you can't just have a connect my wallet and this is all good, right? There's a lot of really tough infrastructure you have to build. I have to ask the question, if if someone wants to, I'll give it a second here. I have to ask the question, if someone wants to see something, are they the right person to be able to see it? If someone wants to access an application, is it the type of person who's able to? So this is what we call our permissions grid. You have various roles like your admins or your support roles or your members. And for every single application on Mezzanine, you have corresponding permissions. Are they even allowed to see this app at all? Are they allowed to do something in this app? And so we give power to the organization, give them granular control to be able to figure out what should people be able to see and do. And then of course you can, actually manage those groups. Maybe I want to add you as a support role. Maybe you as an investor, I want you to be able to see certain things. So it's very simple. Let me just go ahead and add Jeff. Oh, he's not in my contacts yet. It's very simple. I'll add you to my organization and I'll give you view access. And now you get to become one member, one stakeholder within my broader organization.
So this is basically a founder's dream of just being able to organize and put everything under one roof, be able to pay out the people, be able to show the investors as much or as little as they'd want. And then additionally, this app store. So are these all apps that, and these are the third party apps that you were referring to earlier?
Right. So there's a handful of them that are live right now, and then many more that are in development coming soon. And to start off with, we ourselves built a handful of these applications. We basically treated ourselves like a third party developer and said, what if we wanted to build a payment application? And we built a payment application that had all these enterprise grade tools built into it, right? How do I use the contacts and the contact system? How do I automatically pull which assets they have sitting in their treasury? How do I, generate a document based off of this, transaction history? Do I have a place that these transactions are actually approved? Can I show this person the history of all the things that have actually happened? Do I have the contact system that's integrated? Do I generate a document, right? So we basically treated ourselves like that third party developer so that when third party developers were ready to build on us, we'd already built that whole suite of tools.
So you're giving, I mean, the thing that's great about this is if I'm a third party developer and I'm just looking for a side hustle for an idea that I have and it's not really catching wind, you're kind of providing an audience and an immediate use case for these people that are building these like niche products that may not be self-sustaining and on their own, but would fit perfectly in a suite of, apps like this.
100%. This is a tool for distribution for builders and developers who are building products for organizations and companies who are doing things on chain and using stablecoins, and they want to take their product and they want to put it in the hands of businesses because right now it's really hard to build a distribution channel. It's hard to build a funnel and find people. Hey, I want you to use my product for fundraising or for corporate debt or for vesting or for e-sign documents. How are you going to reach your customers? If you integrate it here, you've got distribution built in and you also have a monetization channel built in.
So that's what my next question was, is talking about the monetization aspect for these developers, but then simultaneously, what's the vetting process look like?
Yeah, that's a great question. So right now, in this kind of early phases of things, what you'll see is apps that aren't yet complete, you can join waitlist. If an app hasn't been added yet, it'll just say add this app. And so the first ones that we built out, especially because we're building them, these things are free. And in an upcoming upgrade here, it's just going to have a basic payment system that says, do you want to pay for it monthly, annually, in a kind of standard SaaS fashion? And you can monetize your product that way. Some of the products also choose to monetize within the protocols themselves. And so there's essentially some type of transaction fee. Both of those are entirely, valid options. So that's how we help them monetize.
Got it. So at this stage, where are you at? Are you bootstrapped? Did you receive pre-seed funding? Like, what does that part of this journey look like?
Yeah, we received pre-seed funding. I was investing at a venture fund under the kind of Skybridge umbrella. If you ever heard the name, Scaramucci, he runs an organization called Skybridge. and they had a crypto venture fund. Was an investor with them for a while, investing at the intersection of regulated capital and crypto, lots of stuff related to stable coins, tokenization, tokenized private credit, equity, lots of things. And I was an investor for them for a while, and then spun out, took a 500K check to start building Mezzanine with a handful of very talented developers.
Got it. And so how long were you working with Skybridge?
I was with them for about a year before the itchiness was too much, and I said I got to go back to building.
And so when did you like time frame, what was it?
So so this was in 2023. I'm getting
Okay.
all my timeline
I
right.
know, I know. We're going. It's like a Christopher Nolan film. It's just like I'm going to the end to the beginning, bringing you back to the middle. Like,
Yeah.
yeah. So that's my bad. But
No, no, it's okay. Okay.
so it was 2023 that you were working with them.
Yeah. And there's there in the middle of this whole thing. I mean, we actually had a major pivot when we first launched Mezzanine. The original product that we were going to be building was an L2 with a built-in identity layer. It
Okay.
was a fork of the OP stack, and it basically guaranteed that all people who were interacting on this otherwise permissionless network that could still settle to the L1, allow for permissionless withdrawals. This is what we talked about earlier, this very delicate balance is it allowed people to interact on this type of network, but you could guarantee this person's not on an OFAC sanction list. This person is not a bad actor. But we saw the whole L2 space get really crazy, and we also started building this mezzanine product and getting really excited about it. This whole kind of company operating system, first and foremost for ourselves. And we realized, wow, like I'm getting way more excited and enthusiastic about this thing. And so we started building it full time.
Got it. That's so exciting.
Yeah.
So was Robert Phillips a part of your day to day when you were at Skybridge? Did you get to interact with him at all?
I did not. So there is a very clear delineation between Skybridge and then like the
The
salt
fund.
salt crypto fund really
Yeah.
was it really is truly its own independent vehicle with just associations. So there was just really a team of three of us on the investing side.
Oh, that's so
Yeah,
man, that's awesome. How
yeah,
fun. But yeah, no, he's a family friend. I know Rob. I don't know if you got to meet him, but he's a great guy. But anyway, we're coming up on time. What are some of the things that you'd like to shout out? If there's anything coming up with Mezzanine, anything that you'd like to plug in, feel free.
absolutely. There's two big things I'd love for everyone to be aware of. Number one is if you are a team, if you're a company, especially if you're an early stage crypto native venture backed team who deals with a real bank account and also stable coins, let us know. I'd love to onboard you to our product. I'd love for you to use it, and I'd love to work with you guys. Number two is if you are a team or a developer who's building something that you want to put in the hands of companies, in the hands of teams who are doing something with stable coins, you're building anything related to payments, transfers, vesting, reimbursements, fundraising, stuff that touches that a company would need in their kind of operations and back office, let me know because we can probably provide you monetization and distribution for your product.
It's amazing. That's awesome. So, Graham, it's been a pleasure. I'm so glad to have met you, and I'm sure I'll be seeing you around. And man, this was a blast. If you could wait like 5 seconds after, just want to debrief and give you my thanks. And yeah, but this was great, man. I'll be putting this out here shortly.
Absolutely. Thanks for having me.
Awesome. Thank you. Cheers.